Welcome to the Goose Hollow Capital Weekly Market Update. In this edition, we'll recap recent events, preview what's on the horizon, and share some interesting charts and market price action that caught our attention. We start with a chart of China's trade with Russia, which has been booming since the war started in early 2022. Export volumes from China have grown at 35% per year. Recent news of China exporting not just dual-use technology, but also military technology, implies that Chinese banks and intermediaries could be subject to secondary sanctions for facilitating this trade. The recent squeeze in funding markets in Russia for CNH liquidity, chart on the right, implies that this may be shifting. We continue to keep an eye on this conflict as the risk of escalation continues to go up. Next, we look at the chart of recent survey conducted by the New York Fed, found that more than 4% of U.S. employees currently fear losing their jobs, the highest level since 2014. The data reveals a notable gender disparity. 6.5% of women are worried about job loss compared to 2.5% of men, highlighting persistent gender inequality in the labor market. The survey also identifies workers without higher education and those earning less than $60,000 per year as the most vulnerable groups, with heightened concerns about job security. These findings show the uneven impact of economic uncertainty across different demographics. Next, a chart illustrating the shifting dynamics of global military expenditure between the United States and China from 1993 to 2021. While the U.S. has maintained a dominant position, its share has declined from about 50% to 37% over the period. Conversely, China's share has risen steadily from around 2% to 13%, indicating its growing military ambitions and economic strength. Next, we look at ETFs that performed the best during previous rate cuts. It looks like based on historical performance after rate cuts, gold, silver, and other precious metal-related ETFs did the best historically. More recently, technology stocks have also done well after interest rate cuts. Will history repeat itself this year? Next this week, China increased their retirement age. The policy change will be carried out over 15 years, with the retirement age for men raised to 63 years and for women to 55 or 58 years, depending on their jobs. The current retirement age is 60 for men and 50 for women in blue-collar jobs, and 55 for women doing white-collar work. As life expectancy improves, the old age dependency ratio continues to increase, and this increase will push the retirement age. In the case of Japan and China, the dependency ratio is set to head towards 80% and 50% by 2050. This will put massive fiscal strain on their economies. In order to solve this issue, some have chosen to increase immigration, others have chosen to increase retirement age and increased robotics. Countries such as China and Russia have chosen to increase their retirement age. However, this may not be politically viable in more prosperous Western economies like France. Next, a chart of day-ahead electricity prices in California from last week. High temperatures, spiking day-ahead prices, import cuts, and wildfires. A problematic milieu. Despite this, real-time prices remained low, and neither conservation calls nor emergency alerts made an appearance. Since the last challenging stretch in CAISO, battery storage has expanded dramatically. Chart on the right. Last week, batteries discharge peaked from 5 to 7 gigawatts on each day. In 2022, the peak day was around half of that 7 gigawatt value, while most days throughout the week peaked well under 3 gigawatts. Finally, we look at a chart of the postal duty-free exemption threshold across countries. The number of low-value shipments entering the U.S. under the de minimis threshold has increased dramatically in recent years. This has benefited Chinese e-commerce companies such as Temu and Shein. The U.S. has had a much higher duty-free threshold compared to other countries at $800. The Biden administration has announced plans to deny the de minimis exemption for goods subject to certain tariffs, e.g., Section 301 tariffs on Chinese products. The proposed changes aim to address the challenges posed by the surge in low-value shipments while maintaining legitimate trade flows. This will have an impact on advertising spend by these two companies, with Meta, Pinterest, Google, and Snapchat, and the shippers, particularly UPS. The beneficiaries are domestic marketplaces, including Amazon, eBay, and Walmart. That is it from us this week. Thank you for watching. This material is intended for information purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities to any person in any jurisdiction. The opinions expressed are subject to change without notice. This information is not intended to be complete or exhaustive, and no representations or warranties, either express or implied, are made regarding the accuracy or completeness of the information contained herein. This material may contain estimates and forward-looking statements, which may include forecasts and do not represent a guarantee of future performance.